Google parent Alphabet and Microsoft kicked off the string of tech earnings on Tuesday with better than expected quarterly results. The companies continued their recovery in the third quarter after a turbulent 2022 when advertisers and clients cut back on their spending. Facebook owner Meta and Amazon have also joined their peers this week in reporting strong financial performances. Microsoft posted a 27% jump in third quarter net profit to $22.3 billion as higher than expected AI consumption boosted its cloud business. Revenue in its cloud computing platform Azure grew 29% after a year in which many customers have been cutting their cloud spending. Well, shares in the software giant surged 4% on the earnings news, adding about $100 billion to its market value. This was the company's first earnings report since it closed its $69 billion acquisition of Call of Duty maker Activision Blizzard earlier this month. The takeover is expected to supercharge Microsoft's gaming business in the coming quarters. Now, net profit at Alphabet surged more than 40% from a year ago to nearly $20 billion, thanks to a surge in search and advertising units. Revenue also rose 11% to around $77 billion after 4 straight quarters of single-digit growth. But growth in its cloud computing division slowed to 22% in the third quarter, below the 26% analysts had expected. Shares in the Google parent fell nearly 10% after the report, as investors worry that the internet giant could lose share in the cloud computing market to rival Microsoft. Google attributed the slowdown to the effect of customer optimization efforts as clients look to reduce costs. Meta's net profit more than doubled to around $11.5 billion, driven by a 24% jump in ad sales after a post-pandemic slump. Revenue rose 23% to top $34 billion, the highest quarterly sales figure since the Facebook owner went public in 2012. But the social media giant has warned that expenses could increase by up to $99 billion in the year ahead, as it remains optimistic about the future of its costly bet on the metaverse, which has yet to bear fruit. And like rivals, a recovery in advertising market has also powered Amazon's earnings during the period. Net profit at the world's largest retailer more than tripled to nearly $10 billion as third-party sellers and large brands increased their ad spending. The third quarter includes the results of the year's Prime Day promotion, which Amazon described as its biggest ever sale. Amazon Web Services, which dominates the cloud computing sector, saw quarterly sales jump 12% to $23.1 billion. Now, Tim Courtney is Chief Investment Officer at Essential Wealth Advisors. He says tech giants have to keep providing strong financial results to justify their sky-high market caps.
It's earnings season, and there are a particular set of companies that were, for lack of a better term, they were priced for perfection, as the old saying goes. And, the Magnificent Seven, those technology and communication mega cap names have done great. They've driven everything in the market so far this year, but they have to have everything work out. Every quarter, they have to be hitting grand slam home runs with their earnings. And so the slightest bit of weakness or slightest bit of disappointment in earnings is going to really cause a problem with the market's confidence in those names. And that's, I think, what's happening today. I think some companies have come out with some relatively good earnings, but others have not. I think Google probably is the one that missed. And so it's pulling the averages down. It's certainly in the NASDAQ, obviously in the S&P, it's a heavyweight there. And so these, the upside is these companies have provided great returns year to date. The downside is they have to keep on performing to justify these prices, which they are well out of their normal valuation range, these mega cap tech names.